Joining us now is Daniel Wolf, partner specializing in M&A deals and private equity at Kirkland Ellis. Also joining us is Bloomberg's star deals reporter, Michelle Davis. Daniel, you heard what Paul had to say here. Do you agree that there could be a cloud over the M&A market given all the uncertainty we have ahead?
Yeah, I think, the famous thing that a lot of deal makers say when they talk about it, everyone says they're cautiously optimistic. I think I would probably say I'm cautiously pessimistic about what the rest of the year is going to bring. I think that the things that have been damping down M&A activity look like they're going to continue through the rest of the year. You're talking about higher interest rates. You're talking about uncertainty about the election. You're looking at the regulatory environment continuing to be, a cloud over deal making. So I think looking ahead for the rest of the year, I think we may be facing a lot of the same and have that same limited activity that we've seen in the first half.
So coming into the year, there was all this optimism. We saw a ton of mega deals. There have been 16 deals bigger than $10 billion this year, but most of them were in the first quarter. Why? I mean, what happened between then and now? Is it just those rate cuts didn't come, or?
I think the rate cut's not coming as quickly as people expected certainly has affected the market. There's no scientific formula for saying, hey, here's what's going to drive activity. But I think if you look at the current market, right now, the biggest obstacle is valuation disconnects. And that takes all the inputs. It takes interest rates, it takes regulatory environment, it takes geopolitical risk, and all calculates in that. You go back to 11th grade economics, willing buyer, willing seller. That's what drives activity. And I think that having gone through a period with really low interest rates, that really distorted asset valuation. And I think as we sit in the market, buyers want the market to take account of the higher interest rates, higher for longer continuing. And I think sellers are still looking back and saying, whoa, I like those valuations 2 years ago. And I think until we're able to bridge that gap, and whether it's because interest rates come down or sellers get more realistic about valuations, I think we're going to continue seeing a choppy market.
So another topic that obviously comes up when people talk about M&A is the election. And I just have to ask, how big of a deal is the election to M&A? Like, obviously it's a talking point, but are your clients sitting there saying, we're going to put this deal on hold because we don't know what's going to happen?
We've definitely had those types of conversations. I'd say, going back to my childhood, I never remember going into an election or going to bed on election night wondering who was going to win. I think the last 25 years really has changed that. And there's real uncertainty about what the outcome of the election is going to be. And uncertainty is not a good thing for M&A. I mean, just think about it. You're a CFO sitting there trying to pencil out a deal. And do you put in 35% corporate tax rates or 21% corporate tax rates? And without that knowledge, I think a lot of people step back and say, I want to wait and see what the outcome is. And, they don't even necessarily have a preference as to what that outcome is. They just want the certainty of knowing what it is so that they can pencil that in. I think that's going to continue as long as the election outcome seems close. I still think we're going to see that uncertainty as an overhang on the market.
It's interesting. How long does that uncertainty last even after the election? You think about the uncertainty that exists around how a different president or even the current president may approach certain deals. Yeah. How long will that take to shake out?
Yeah, I think the reality is that people get ahead of the actual changes being made. It's just knowing the outcome, then people can start planning and start acting on it. They probably act on it before the effects are actually felt in policy, in regulatory environment and stuff like that. But I think just knowing which way it's headed or which way the winds are blowing helps people.
There's this idea that the Republican Party is a little lighter, but when it comes to deals, and when it comes to deals regulation, is that the truth, right, given the issues that we're facing today?
Historically, that's been the case. And, I think a lot of people going into a potential second Trump administration are assuming that regulatory would go back to a traditional Republican approach to those matters, and that certainly will be a lighter touch than we're currently seeing, which is as heavy as it's ever been. I think one of the things that we've been paying attention to that's been really noticeable is this move on the populist right to start making common cause with the progressive left on antitrust questions. You're seeing the likes of J.D. Vance, Josh Hawley starting to come out and say the same thing about deals that you're hearing Elizabeth Warren say. And that's a little bit, sort of disconcerting for people on the assumption that, Trump's going to win and therefore antitrust is going to be just fine. I think it will be lighter, but I don't know how much lighter.
So people may be getting ahead of themselves if they think it's just going to be great. So another area that I know you've worked a lot in is pharma. You've advised on a lot of the big deals in this space. It's always attention-grabbing deals, but we haven't seen anything bigger than $5 billion announced this year in that space. What's going on, and what do you see happening the rest of the year?
I think it's a combination of factors. I think you have a scarcity of assets, right? The IPO market for biotechs has been largely shut over the last couple of years, and that we always count on the IPO market to replenish the supply of companies to be acquired, and that has not happened. And the same with the private capital markets are not available for them. So we've seen less growth among the biotechs, less investment in that, and that it creates a scarcity of assets. Scarcity creates overvaluation, and pharmas are looking at the available targets and not necessarily being able to pencil it out and make it work from a valuation standpoint. Look, there are quite a few pharmas that have upcoming patent cliffs and certainly are going to be in the market looking to replenish their pipelines. I think it's going to take some time for valuations to set up so that the deals actually work. Just because you need to replenish your pipeline doesn't mean you're going to pay any price to acquire the available assets.
We have less than a minute left here, but curious, this idea of where are the large-scale deals in pharma, to your point on whether you're in a Democratic or Republican administration, is 20 the new 50? Is 10 the new 20? Are large-scale deals going to be able to get done at all?
Right. Well, look, you put the regulatory overlay, you put the valuation questions, and yeah, I think what we've seen, if you look at the activity level across different deal sizes, the middle, that $2 billion to $10 billion or even $20 billion, that has actually normalized at historical levels. What's been missing is those mega deals at one end and the whole lower end of the market. The engine of the market, the middle market, the 500 or below, is well below historical levels of activity. I think, there's different drivers of each of those, but until we get recovery on both of those, I don't think we're going to be able to say that M&A is back with the exuberance that we want to.